All right, hello, good morning, good evening, and good night. I hope you guys are doing absolutely fantastic because in today's video, we're going to be talking about TSLY again. The reason being, will TSLY ever be able to recover from this NAV erosion? Now, as you can see over the max price chart history of TSLY, the Yieldmax fund, it has just been trending down. Sure, in the same current time period, Tesla has also pretty much trended in a downtrend for the majority of the time, which does not help TSLY in any case. But today we're talking about, will TSLY be able to recover from NAV erosion? I think yes, and I think no. Mainly, I do say no, just due to over time, TSLY and mainly the Yieldmax strategies, they will continue to go down. This reverse stock split that's going to be happening, which I covered for TSLY, is pretty much inevitable in a majority of the Yieldmax funds just due to the high nature of the dividends that they pay out. But today, I'm going to show you why TSLY's price could potentially reach back to previous levels and even higher. But obviously, it comes with very certain circumstances with the underlying stock. So in this video, we're going to be talking about TSLY, their NAV erosion, and will they be able to recover? I hope you guys do enjoy this video. If you guys do, please do remember to subscribe. We are now up to 4,132. Look at that. The 2 and the 3, they switch numbers there. I want to say thank you to everyone who's subscribing, all the new subscribers who join us every single day. I do this for fun mainly, but I do this as well to kind of update you guys on anything with your investments. If you're invested in anything Yieldmax, Defiance, high yielding ETFs, anything like that that interests you. So thank you to everyone who has subscribed. Today, we're talking about TSLY and we're talking about the NAV erosion. Now you can see over the past year, 6 months, it doesn't matter. TSLY's price has pretty much trended downwards. And a majority of that reason is due to the fact that they do pay a 53% dividend, an extremely high dividend, and this dividend is being taken out of the share price every single time they do a distribution. Last distribution, 40 cents was taken out of the share price. The previous one, 55, and the previous one, 60, you get the point. So every time TSLY and any Yieldmax fund or any dividend stock or ETF pays a dividend, it will always be taken out of the current share price. Now, what does this mean? This means that over time, if you're paying out 50% in dividends, there's going to potentially be a 50% downtrend in the stock or ETF share price. So it makes sense that if TSLY is paying out this 53%, if TSLY started at $20 at the start of the year, it should be roughly at about $8 to $9 where we are right now, if it paid out all of its dividends at a 53% marker. Now, of course, this also has to do with the underlying stock. If the underlying stock appreciates slowly over time, like we've seen in October to December, this period right here, then the share price of the underlying or of the Yieldmax version, TSLY, could be able to recover and hold kind of its NAV erosion, quote unquote. But when we see these huge drops in Tesla, we will also see these huge drops in TSLY. And then we see, obviously, the distributions taken out of TSLY, which further brings that share price down. So in order for the NAV erosion to not really be as prevalent, we need the underlying stock to slowly appreciate over time. And we really need to stay away from these massive downswings like we've seen here on this one day, where we went from, just to zoom in a little closer, $211 roughly and down to $182 in Tesla's share price. This has a significant impact on TSLY because when we have these huge downtrends, we tend to not really recover as well. The reason being is because in Yieldmax strategy, it says the fund takes all of the downside but is limited to the upside. And I'm sure I can say here, the fund strategy will cap the potential gains if Tesla shares increase in value, but the fund is subject to all the potential losses of TSLA. Now, that is the downside with these funds. Of course, Yieldmax, they do bring in a lot of income, but that comes at a trade because you do lose a lot in share price appreciation. And that's one thing that really Yieldmax struggles with. I do understand that they are doing a reverse stock split, and the kind of person that writes the options contracts, synthetic cover call options contracts, Jay Pestrachilli, which I always butcher his name, he mentions that as long as you reinvest, you get more shares over time, the Yieldmax strategy will work. And I do understand they are doing a reverse stock split, so that share price is going to double. The distributions are going to double from 40 to 80, but you are also going to half your shares. So this was really a video just to kind of go over the NAV erosion of Yieldmax. Obviously, it is there. It's there whenever a high dividend paying or high distribution paying ETF or stock is in play, just due to the fact that the dividends take so much out of the share price that the underlying stock, it needs to appreciate slowly over time in order for the strategy, the ETF, to capitalize on those slow gains. The reason being because Yieldmax takes all of the downside but is limited on the upside. If Tesla makes these massive moves like it did the other day where it was up 6%, I remember quoting TSLY at 4%. Now, if Tesla goes down 2.5% and TSLY goes down 2.5%, for example, then obviously that is a losing trend. But if Tesla can slowly appreciate over time, the NAV erosion in TSLY will be okay. But like anything, there's obviously risk when it comes to investing, and you guys got to make the best call for you on what you guys think. But I hope you guys did enjoy this video. It was just meant to be a super quick video just to kind of give you a perspective on the NAV erosion of TSLY, some scenarios where obviously we could potentially see the NAV kind of increase and recover. But I think long term, the Yieldmax strategy overall tends to depreciate the NAV. And the good thing is they are doing the reverse stock split, which would kind of help in the long term, but over time, your Yieldmax investments will most likely go down, but with reinvestments and the 50% dividends, these high dividend paying yields, then maybe it could potentially outweigh that. But obviously, they're still young. They're only about a year old, so we still have time to see. So if you guys did enjoy this video, please do remember to subscribe. We are up to 4,132 subscribers. I want to say thank you guys for sticking around all the way to the end. I hope you guys do take care, and I hope to see you guys in the next video.